Hey everyone, my name is Mike and welcome to CryptoTaxed. In today's video, we're going to be going over crypto taxes and how they've changed in 2018 and what you really need to know before you file your taxes and before you make trades. Before we begin though, let's go over that disclaimer. Information provided in our videos and accompanying materials is for informational purposes only. It should not be considered legal or financial advice. You should consult with your own financial advisor before making any investment decisions. Alright you guys, right now I have up an article that was written on CoinDesk back in April, back kind of when, tax season is, but it's a very, very good article that I found the information to be very nice, and so I'm going to put a description, I'm going to put the link in the description below. That way if you want to check this out, read it, you can see everything about crypto. Also, it's got other things on CoinDesk, so if you're just new to the crypto world, which hopefully if you're watching this video, you probably are, you've been in it for a little bit, but you still got some questions, this is actually a really good website as far as getting some of that information. So let's go ahead and get started. This graph right here, this actually represents the market cap. And so as you can see, in 2017 it was kind of low, but then right around November, we just took off, or shot off to the moon, so to say. And I can remember back then when we were trading, it was $750 billion is what we ended up getting into. Back down here, you're talking about like 50 billion. Over here, it's been trickling back down. But what happened with that is the tax laws before 2018, they were actually, there was guidance by the IRS in 2014 that basically said when you went from US dollars to say Bitcoin, you could take that Bitcoin and hold it, then transfer it to say Litecoin or Ripple, then come back to Bitcoin and then sell it. And so if you put in, we'll just say $100 for just a rough example, 9 months later, after doing all your trades and stuff, you came back out into US dollars into say $1,000, you had realized a $900 gain, and that $900 gain, because it was only 9 months, would have been a short-term gain. So during that time, it was actually rather easy to keep track of your taxes, gains, losses, and everything in between. With the 2018 new tax law, though, those definitions really got changed. It's not a big difference, but the way we have to track it is massively different. So let me just go ahead and explain it. Then I'll go over this little brief explanation of everything. So the way the new tax law reads, or basically in general says, is that when you take that same US dollar, buy Bitcoin, the moment you take that Bitcoin to say purchase Litecoin or Ripple or any other alt currency, at that point in time, that is now a taxable event. So whereas before you could trade and go into any of these other altcoins and it not be considered a taxable event, now it is. So when you would keep track of your cryptos before, you would just basically keep track of what you put in, what you came out. Now it is, all right, I went from US dollars to Bitcoin. Next event, I went from Bitcoin and I bought Ripple. All right, I took some of that other Bitcoin and bought Litecoin. And you have to keep track of the dollar amount of what you had versus the dollar amount of what you're buying. And by doing that, you can keep a ledger of basically all your different trades. So let's go ahead and hop into the article real quick, and I'm not going to read this whole thing. Again, I'm going to put the link down in the description. If you want to read it all, by all means, it's a good read, and it really helps you understand. I'm just going to give you a short overview. But this is good at definition or explanation. It does have one typo here. That's supposed to be a 1. But if you bought one Bitcoin at $4,000 in August and sold one for $14,000 in December, your taxable gain is $10,000 minus your commissions or fees. You realize a gain on the coin you sold, If you held it less than 12 months, it's a short-term gain, which is taxed as ordinary income. And again, hopefully you know what short-term and long-term gains and losses are, but short-term gains is anything held less than 12 months. Long-term is anything held more than 1 year. And it's like income tax, multiple brackets. I'd be here for quite a while, and I don't want to bore you to death with all the different percents. So by all means, go look at the IRS websites if you want the breakdown of each of those. But just know it's short-term, long-term, based on what length of time between trades. Another important factor is right here in this paragraph is you do not have to withdraw your funds for it to be considered a taxable event. So when you sell your Bitcoin on, let's say, Coinbase, on Coinbase they actually have a US dollar wallet. If you go from Bitcoin to that wallet, you're coming back into a fiat. That is a taxable event. That's just, not just somewhere you just store it until you go back to your bank is taxable. Once you come out of a crypto into US dollar or fiat is a taxable event. And the other big thing with the law, kind of like what I did before, that brief synopsis, was exchanging one cryptocurrency for another cryptocurrency is now a taxable event. And the reason that is the new tax law defined cryptos as properties. So imagine it like your house or like stocks versus a like-for-like exchange is kind of the best way to word it. Or you'll hear that a lot when you're watching different YouTubers or reading articles. They call it a like-for-like exchange. So basically, if you sold one Bitcoin worth $4,000 for 20 Litecoins valued at $400 each, that's $8,000 total, you just realized a $4,000 gain. And it's the same as if you had sold that Bitcoin for $8,000 US dollars. So just know that that's kind of how the new tax law works. Also, when you spend your crypto is the same as selling it. So if you purchased, say, a $14,000 car with one Bitcoin, it's the same as if you had sold that Bitcoin for $14,000 in like all the examples above. And so, your difference would have been like a $10,000 gain. So even though you bought a material and you might have paid taxes for the car using that, you still owe taxes on the $10,000 gain that you made, because when you first bought the coin, it was $4,000, then it's worth $14,000. Be aware of that just in case. Also, cryptocurrencies are deductible for as charitable donations. Assume you had donated 10 Litecoins to a charity valued at $200 each. That equals $2,000. And that the cost is $50,000 each, or $500. You can deduct the greater of the market value or the cost bias without paying tax on the gain. So in this particular case, you can book $2,000 donation and avoid tax on the $1,500 gain. Now, the other big thing with taxes, and you might hear this some, but mainly when you read news articles and stuff, is going over FIFO, LIFO, and average cost. So a FIFO is basically your first in, first out. And what that is saying is, if you buy a Bitcoin today, then you buy a Bitcoin 2 months from now. If you sold, so you got 2 Bitcoin, just rough example. If you sold one Bitcoin and went to Litecoin and bought however many Litecoins, the first Bitcoin you bought is actually the one that is actually being used for that buy. That's your first in, first out. So they put a nice little illustration right here. So assume you bought one Bitcoin in September for $5,000 and you bought one in November for $10,000. That's $15,000 invested with average cost of $7,500. All right. So if you sold one Bitcoin, one of these two, in December for $15,000, your FIFO cost is $5,000. so it's implying a gain of 10,000. So the first coin here cost $5,000. December you sold it for 15. 15 minus 5 equals 10, and that's how it works. And the reason they do that is because you're actually being charged a higher gain for taxes. If you were to use, say, LIFO, last in, first out, you would assume that $10,000 coin instead of the $5,000, which means you only had a gain of $5,000. So you can see in this example, there's a $5,000 difference. That $5,000 difference is huge if you file it wrong. So if you file it under LIFO, you could be charged for back taxes, penalties, or interest, all because you chose LIFO versus FIFO. Also, the IRS, they can retrofit all this. So this little article right here is just simply saying, the IRS at some point is going to issue a new guidance on the crypto taxation. Right now, it's still kind of muddy water, so to say. We do have some guidance, but it's kind of like from 2014, 2017, they gave us one thing, the new tax law added something to it, and we still don't have complete guidance. But a new article came out today where House of Representative members and senators are asking IRS to start getting more guidance to the crypto sphere as far as how to look at taxes. And this is actually their second request at this. And as you know, with anything political, the more they put pressure on them, the sooner we're going to see something. So this being the second time, we're probably going to hear something from the IRS this go around. If not, the Congress or something will act on this regard, because there is a lot of people in the crypto sphere. Second part is IRS rules can be retroactively enforced. So if you did LIFO or last in, first out, and then they come out and make a staunch guideline 3 months from now, they can retrofit this thing in the past. And IRS audits, as you know, can cover 3 years. So just because it happened this year or 3 years ago doesn't mean they can't go back and look at it and charge you for like tax evasion or anything crazy like that. So again, here's the article. I'm going to put a link in the description below. It's a really good read, and I just highly recommend you checking it out. The second article I got for you to get today, far as taxes are concerned, is basically how we're taxed in other countries. In this news article, I'll put it again down below. We have like the UK, how they do taxes, and a brief explanation on it. And then you got the US, and it just goes through a bunch of different countries. I'll just kind of scroll through it so you can see them. There's South Korea, Russia, South Africa, Canada, Brazil, Germany, Switzerland. So it's not all of them, but it is a very good article to read, especially if you think you're going to move somewhere. All right, you guys, so that's covers everything for us, the crypto tax. Again, do your own homework. Make sure you really understand. This is just kind of like a guide or guidance to help you get in the right direction, because taxes in the crypto sphere is very, very important, because they are going to start cracking down on this. Early in the year, they asked for Coinbase for like 13,000 members of Coinbase. So, I ain't going to tell you what to do. I mean, you're your own person. But for me, I'd rather be responsible and make sure to try to do everything as legal as possible. Before we go, one thing I want to do that's not tax related, that's something different, is when you're new to crypto, sometimes it's hard to see or explain to people, hey, this is what Bitcoin, this is what these different coins are. So I want to take the time to show you real quick a project that is actually crypto based. It's a decentralized item that you can use right now. And I don't know how many people out there know it, but if you want to show somebody something that is in the crypto world that they can use today and is very, very nice, and I would recommend, this is it. So the browser I'm using is called Brave. Brave is supported by the BAT crypto token. And the difference is this is Google Chrome, and I'm sure y'all can kind of recognize Google Chrome. So I'm looking at the exact same news article. I'm going to close this one over here. I'm looking at the exact same news article. So you can see when I switch screens. The difference is, if you look right here, you see these ads. Brave actually blocks them for you. So if you don't want to see ads, you want to see stuff blocked, Brave might be for you. And right up here, as you can see, it tells me how many ads have been blocked by this. You can control it, turn it on and off. You can control your blocking features and stuff. So if you're a person like me that hates ads and stuff, and I believe in blockchain, I believe in the crypto sphere, I want to support them as much as possible, this is one that might be, right up your alley. It's based on the Chrome model, so if you like Chrome, it might be for you. Again, here's another little section. I'll go over here to Chrome. We're going to scroll down. You can see it's the same. That ad was blocked, as you can see right there. Here we go. 1, 2, 3, 4, 5, 6, 7. 7 ads. 8 ads if you count this one. And I'll scroll up just a little bit so you can go back and forth. Right there, they're gone. So just want to put it out there. It's always nice seeing something in blockchain or crypto that you can use right now. There's some other ones, and as I use them and show them to you, by all means, take it however you want to. Hey, but with that, you guys, I hope you enjoyed this video. If you like this, would like to see more, we're going to do technical analysis, chart reading, news. We're going to do a coin of the week. And with coin of the week, we're just going to pick out a random coin. It doesn't have to be Bitcoin, don't have to be Litecoin, don't have to be one that everybody knows. But if you would like to get information on one or whatever, put it in the comment below, and we'll try to do that for you guys. By all means, please subscribe, hit the notification bells. That way you're notified anytime we upload a new article or video. And also smash that like button to help our channel grow. We really want to bring a lot of information and help this cryptocurrency world. I feel like there's never too many voices out there. So with that, you guys, I hope you enjoyed it, and we'll see you next time.